All right, should be popping up here momentarily. You guys, let me know if you can hear me okay, and we'll begin the live session. Looks like it's might have 60 seconds till it starts. You're watching on X. My apologies. Going to be just a second, but we're going to get started in about 60 seconds. Whoop. Here we go. All right, guess we are live. Welcome to the live trading session this morning. Today is Monday, January the 12th. What you're looking at here is a chart of silver, which will not quit. I mean, the metals markets could not be hotter. I've never been more glad to start investing heavily in something than I did in gold and silver and palladium over the last couple of months because they are just ripping up the right side of the chart. Silver closed Friday at 79 an ounce. It's up at 85 and a half. And silvers are coming back as the go-to both inflationary hedge and then also a safety play. So you've got, everybody hear me okay? Yep, can hear me? Okay. We've got a market at all-time highs. We have liquidity improving and money pumping in. We have above-average inflation, which pushes to the metals. We have a devaluing dollar, which pushes metals. And then anytime we get any moment of uncertainty, they go into metals. So it's like everything leads to gold and silver. And what happened over the weekend, if you missed it, the Department of Justice showed up with subpoenas for Jerome Powell. And I'm going to get into the basics here. If this is in this over your head, ignore it. But just to keep you guys up to speed over the next 3 or 4 minutes, and then we'll dive into the patterns and what we want to look for. But essentially, the Department of Justice handed subpoenas to the Federal Reserve over, they're claiming is Jerome Powell's statements to Senate. So they're revamping the Federal Reserve headquarters, I guess, so they can devalue our dollar more comfortably. And the budget for that project, like anything the government does, came in way higher than expected. And so it's being looked at as a very political move, and it probably is. The Federal Reserve is supposed to be independent from lawmakers. And Trump, as we know, has been hammering Powell to cut interest rates aggressively. He's not done so as much as Trump would think. And so Powell made a statement saying, hey, I mean, in a nice way, saying this is what this is. It's retribution for not cutting rates as quickly as the president wanted to. And so anyway, when you got the head of the Federal Reserve and the president of the United States, two of the most powerful men in the world when it comes to economic matters, bickering and suing each other and pressing charges, it's a bit of uncertainty. And so how the markets responded over the weekend, silver up 7.5%. Gold also making new all-time highs, up 3%. Meanwhile, the S&P 500 opening, you can see all the futures over here. Let me open it up for you. Here they are. So the S&P, NASDAQ, Dow, all down about 0.5 to 0.75%. Now, that's down 0.5 to 0.75% from all-time highs. We're not going to get scared over any of this, but that's what's happening, and that's what the cause is for the overnight movement. Okay, so out of curiosity, how many people are joining us here for the first time? How many of you is your first live session with me, first or second? Good morning from Florida. Good day, Bruce, Robert. Good to see you guys. Mike, Patricia, hello. Yeah, gold miners up big, Stephen. Not seeing 64. I know. Kappa, I was looking for a pullback in silver. So what happened is they raised the margin rates here. Silver sucked down to like 70, 69. I thought we'd get a pullback into like here at 64 to add on. Didn't quite get it. And it is just ripped higher. I already own some. I just wanted a spot to buy some more. And the funny thing is, I was talking to my neighbor over the weekend. His dad apparently bought like thousands of ounces of silver, 100 ounces of gold, like back in 2013, 2014. He's since passed away. He texts his mom, says, Mom, do you still have that? I was like, yeah, I think it's in a safe deposit box. So he's got all this monstrous money. So he was going to sell me. He said, hey, I'm going to buy a new gun. You want to buy 50 ounces? I'll sell it to you at spot or the lender. I was like, sure. All right, done. And then I just texted him and said, man, it was at 79, made the deal. It's at 85 now. So I don't know what I'm going to have to pay the guy. But all right, if you're here for the first time, welcome. Pleasure to have you on. I want to kind of go through some of the basics here to get everyone on the same page. And there's a concept known is the four stages of the stock cycle. And I don't think a lot of people know about it. I know it's not taught very much. Now, as much as I'd love to take credit for this, I didn't come up with this on my own. This has been in existence for more than 100 years. But this is a general cycle that most stocks, commodities, everything go through. This is a weekly chart. This is Roku. It's going to hold the same truth, whether it's any growth stock, any asset class. They tend to go through these phases because what moves stocks, what moves metals, what moves Bitcoin is not you and me and all of us with our 5 or 10 or 100,000 or $200,000 accounts. Okay. It's Blackstone and BlackRock and Goldman Sachs and Warren Buffett. It's the big smart money, multi-billion, right? And so the way they invest and the way they trade is different than you and I. They tend to, buy in a macro perspective, because of their size, they can't go in and out as quickly as you and I. And so they tend to take weeks, months building up large positions, buy for 6, 7, 8, 9, 10 months. And then things get overvalued, overcooked, and they come back down. But it follows this 4-stage cycle. So stage 1 is the accumulation phase. This one here in Roku, really, it was about this long. But this is the COVID sell-off right here in March of 2020. But you see the idea, just kind of bouncing between 100, 140 for a year, year and a half, not really going anywhere. And then eventually, the stock breaks out, goes into stage 2. And this is where the money is made. This is the markup phase. And essentially what's happening is in stage 1, they're building up these positions, right? They're buying day after day and week after week and month after month and building large positions. And then in stage 2, demand just surges. The companies got huge earnings and sales growth. They're in AI, and AI is hot. It's a metals company, metals, whatever the reason, is huge demand. And stocks, commodities, ETFs in stage 2 tend to take a pretty steady run up. Now, this red line here is the 50-day simple moving average. The white line is the 200-day. And as you can see, in stage 2, it pretty cleanly rides up that 50-day moving average. And the reason is just that there's consistent buying. Right, if you're a trader at Goldman Sachs and they say, we want 50 million shares of Roku, you got 3 months to get it done, any 5% or 10% dip, you're going to take advantage of and buy more. And so what that doesn't really let the stock go down, for any dip is actively bought and pushed back up, right? And so stage 2 is where the money is made. 95% of the profits you make as a trader are going to occur when stocks are in stage 2. Now, eventually the party comes to an end. It could be the stock has reached a value they think is in excess of what it's worth. It could be the earnings growth or the sales growth is slowing down. Whatever the reason, the big institutions want out. And when they begin selling, that's what's known as the distribution phase. They're taking their profits, they're dumping it out. And you'll note stage 3 because you're going to see the biggest drop you've seen since stage 2 started. So notice in here, again, watch this red 50-day moving average. See how it hasn't broached it the entire time? And then not only does it get below it, it stays and closes below it and holds down there. This is your sign that the party is over, that the institutions are getting out, right? And you had this big, this big, 30% drop in 2 weeks. And the only thing that makes the stock fall 30% in 2 weeks is massive selling by big institutional investors. And this is where most retail traders get in trouble. They see stage 3 as a buying opportunity. And in this case, it was short term. Sometimes it'll just come down and stay here and then roll over. But stage 3 is, in fact, the beginning of the end. And then once all the institutions are out, that consistent buying is no longer there. And there's only retail investors like you and I who don't have the funds to buy every day for 9 weeks straight. The stock begins to roll over. And then at this point, it's kind of a game of uncle. And you hear, I've got diamond hands, good for you. I've got, whatever. And just running stops and running stops. And typically, most stocks, and this is true for Apple and Google and Amazon and Palantir and all of them, most leading stocks in a stage 4 downtrend are going to fall between 50 and 80%. And go back, look at a chart of Bitcoin, look at a logarithmic chart of Amazon and PayPal, and any of them. And you'll see these 50 to 80% declines once every 3, 5, 8, 10 years, whatever. And so then the stock is cheap again, goes back into stage one. It's now a value stock. These guys say, okay, it's good. It's very depressed based on what they're earning, et cetera. Now it looks attractive, and they start buying, and this process repeats over and over again. Okay, so this is the 4 stages of the stock cycle, and it's really important to understand, because if you're trying to make money, which I think we all are, if you're trying to buy stocks or commodities, whatever it is, that are going to go up, you want all the odds stacked in your favor. And so stage 2 is where you want to buy. And so if you got a stock in stage 4, I don't care how good of a trader or investor you are, you're probably not going to do well. And the final piece I'll make on this, and some people say, oh, look, it's cheap. It was at 500. Now it's at 250. That's a buy. You don't want to try to catch a falling knife, and here's why. Let's say we take 2 people, all right? First guy gets caught up in the FOMO. He buys right here. This is person A. Buys this at, 480. Now his buddy waits till it falls all the way down here to 240 to buy, okay? And he's sitting here thinking, you bonehead, you paid 480. I paid half of what you did. I got twice the number of shares. Well, fast forward about 6 months, and let's look at the difference. This guy is down 89%. Okay, so person A is down 89%. Now remember, person B paid half as much. So what do you think he's down at that point? Person A is down 89. Look at this. This guy paid, remember, half as much, is down 78%. Okay? So if you're down 78% and your buddy's down 89, are you still feeling smart? Are you going to call him and brag and say, you bonehead, 89%, I'm only down 78%? No, you're going to feel just as dumb as he is. Anthony, the moving averages are 50 and 200. Red is 50, white is 200. And they're simple daily moving average, 50 day, 200 day. So I just like to illustrate this, because no matter how cheap a stock gets, it can get cheaper. And you might tell Ross, what if I bought it down here at 50? It's come back. Yeah, but it could have gone to 5 first. And you might say, well, a good company's always going to come back. A Google, an Amazon, a Tesla, it's always going to come back. Not necessarily. That's something known as recency bias, where the ones you're thinking of all came back. But look, even our buddy who bought it at 240, who bought it half off the highs in 2021, here he is 4.5 years later, he's still down 56%. So don't try to catch a falling knife. Wait stocks that are going up. And the funny thing about the market is stocks that are very high tend to go higher. Stocks that are very cheap tend to get very cheaper. Now, just for a disclaimer here, if your goal is to buy a stock you can hold for 10 or 15 or 20 years, you believe long-term in Tesla or Roku, whatever the company, fine. It very well may come back. In this case, hadn't so far, but you never know. But we're looking at what I do is something known as swing trading. I'm not day trading. I'm also not trying to Warren Buffett this stuff. I'm looking for stocks I can hold 2, 3, maybe 8 weeks, get a nice clean move on, and go on to the next one. Okay. Now, for those joining us for the first time, or if you haven't already, be sure to subscribe to me on YouTube. I'm streaming this on the Traders Agency channel, but you can go to Ross Givens. Or if you want to join us, there is a link below, tradewithross.com. For just $5, you can get an entire year of my Black Ops membership. We do live sessions every Monday, an additional members-only live session every Thursday over Zoom. You'll get access to these indicators here, which I'm going to cover in a moment. You'll get bonus reports, access to our team, it's literally just $5 for a whole year. So click that link or go to tradewithross.com, get signed up. It's the best $5 you'll spend all year, okay? So we know we want stocks here in stage 2, right? So when do we buy them? Well, the go-to bread and butter setup, and what has made me the most money by a mile, is what's known as a shallowing breakout pattern. And I'll show you one in gold. And the pattern we're looking for is going to be one that looks like this. Okay. Now, obviously, the first thing you want to see is something going up, right? We want stocks in stage 2. We want the wind at our back. But how do we get really precise? How do we know to buy right there? Well, what you want to see is a pattern that looks like this. All right. And they'll vary a little, but this is the idea. And what's happening is the supply is being sucked out of the market. Okay. Now, I want you to think about stocks or Bitcoin or gold or anything you're trading in terms of supply and demand. The market is an auction. It's just buyers and sellers. And there's not infinite ounces of gold or shares of Amazon. There is a limited pool. And a lot of them are not for sale. How many of you in here own gold or silver right now? Maybe you got it in a safe in your closet. Maybe you own it in a retirement account, whatever. Are you currently offering that for sale? No. So how many of you own Amazon or Apple or Nvidia? Are your shares being offered for sale? No. So the supply is how many shares are currently on the market being offered for sale. The demand is how many people are trying to buy those shares, actively wanting to buy more gold, more silver, more Nvidia, whatever it may be. And so if you can find these moments where demand is very high and supply is very low, everybody's trying to buy it, but there's not a lot of it. That's where the price can move very quickly higher. And so after a big run like we saw here in gold, there's going to be some profit taken. There's going to people want to get their money. If it is still in demand, if the buyers are still actively got it, they're going to take advantage and shoot that right back up. There's going to be another wave of sellers. You saw it go to 28 once and twice and 3 times. They're like, screw it, I want to get out. They're going to drive, they're going to push it back up. There's going to be a little more selling and then push back up. And what you'll notice is this shallowing effect. And so what I mean by shallowing, the first dip was about 9.5%. Next one was about 6%. The last one was here at about 2%. And the fact that these dips are getting shallower and shallower, lower and lower and lower, shows you that the supply is being sucked out of the market, that there's fewer and fewer people willing to sell. And once all the $27 and $27.50 and $2,800 gold has been bought, once there's no one else willing to sell in that area, but everybody else still wants to buy, well, what do they got to do now? Well, they got to, well, all right, would you take $28.50? Would you take $29? Would you take $3,000? That's what allows it to move very quickly. And if you look down here at the volume, okay, don't worry about the colors. This is just how many shares traded each day, right? Look at the volume here, October, November, December. Look at the volume here, January, February, March. There's a couple of high days, but was it any higher over here than it was over there? Did a bunch of buying suddenly come in? Did people suddenly start buying? No, there was no increase in demand. There was no more buying on the right than there was on the left. The difference is the buying on the right was chasing a smaller pool of supply, fewer ounces, fewer shares. Okay? So all we're doing is trying to stack everything in our favor. Are we in a bull market? Yeah, we made 33 new all-time highs last year. Or it's gold, it's made 20 new all-time highs in the last 12 months. Okay, good. Is it a strong asset class? Yeah, it's rising up the ranks. It's in stage 2. Perfect. Okay, so how do I find a spot that I can buy, risk very little, and have a big upside? And this is the pattern to do it. Now, another big advantage you're going to have using this is that you don't need to risk a lot of money. And the key in trading is how much you risk to make the money, right? How much do you make when you're right? How much do you lose when you're wrong? Now, anyone can look at this and say, yeah, gold's going up, right? But you could have looked at it back here and said, yeah, gold's going up. I just want to buy some. And if you did, this is what you sort of suffered through. Oh my gosh, I was wrong. It's going down. I'm selling. Wait, it's coming back. I think it's going to go. Okay, I'm down a little. Oh, I'm almost to break even. No, shoot, it's going back down again. Okay, it's back. Oh, it's not coming. Oh, wait, there's some life. No, it's not. Oh, it's. And by this point, what you're saying, forget it. Just get me out of break even. I've been bouncing around for 2.5 months. I don't like this. Ross was wrong. I want out of gold. Right? Now, compare that to if you had bought right up here at $2,800 an ounce. Okay? If you bought, instead of buying here and dealing with what we just went through, if you bought right there and you're up 4% the first week, 6% the first 2 weeks, little pullback, still above water, right? It's much, much easier. And so here's how it lowers your risk. Since this is a shallowing pattern, since these dips, this goes down here and then down here and then right in here. Once it pulls down to 25 and then shoots back up, it should not go back below here again, right? I'm going to make this line red for a reason you'll see in a minute. Okay, it pushes back up here, dips again, right back into the highs. Okay, at this point, it shouldn't go below here. Pushes up in here to the top, little dip, and then rallies back. Okay, at this point, it should not go below here. And so when it finally breaks out, when it gets above this white line, clears through the supply, and you buy it, where is your stop loss? Now, if you're brand new, a stop loss is simply a sell stop order. It's an order you put in that says, okay, if it falls to here, sell it. Don't call me. Don't ask a question. Don't see if I've changed my mind. Instantly sell it. Triggers automatically. That's known as a stop loss. That's your risk. So if we're buying here at 2,800 and our stop loss is here at 2,710, our risk is a whopping 3%. And for that 3% risk, look what you saw. And you're usually going to see this over and over again. So it breaks out, you bought perfectly, the big run up, and then look what happens here. Notice the same pattern forming on the chart. So it makes a big run. It then absorbs a supply of some profit taking. It comes in, it shallows up, it continues to tighten, a nice and clean here, and then breaks out again. Now, if you bought over here at point A, you got a nice profit, you can add at point B. Add more. If you missed the point A buy it at point B. But again, where's your stop loss? You buy in here, call it, 35.70 or so. The first time you risk 3%, and you're sitting on a 26% gain. So when you buy here, or you add here, whatever it may be, what's going on? Oh. Your stop loss is up there, right? You got a new buy, but again, you're only risking 4.5%, and it immediately pays off. Now, what's it look like? Jason, should the stop loss be at break even or raise as you go? I like to raise as I go, and what I do is look for something that was a natural reaction. So, like it comes up, it pulls back. Once it makes a new high, like once it breaks through here, I'd bring my stop up, right, to that swing low or that swing low, whatever it may be. But can you see the pattern here again? Does it look like a good time to buy gold or a bad time to buy gold? Clearly, it's in a bull run. And we're seeing that exact same shallowing pattern play out on the chart. And it broke out here. Now it gets a little wiggly, right? Your stop loss would have been right down in here. So it would have been really close. You got a little retest. These things aren't perfect. But it's ripping back in again. So great time to buy gold, in my opinion. And you're not just going to see this in gold, right? You're going to see this in every stock. I mean, did NVIDIA look Bible now? I mean, not really. But look how it was over in here. Now, look at this pattern in here. Now, this is January 2024. NVIDIA was already up 360%. It had a huge run. And then it needs to absorb that run to digest it. So it's coming in here, Up, nope, still getting deeper, but then up, rip back up, tightening up nicely. Nice little, someone said cup with handle. Yes, same kind of concept. Boom, there's the breakout at 52. And it just about doubled in a couple of months. A $2 trillion company doubled, right? So this to me, and look, did it again. See it there? This one wasn't, they're not all going to be textbook perfect. But same kind of concept here. And this one gapped out on earnings and just, boom, it was gone. Now, does it look fantastic today? I mean, not really. This is the big sell-off. That was a 50% drop in NVIDIA. 43%, excuse me. And it's kind of choppy, so this wouldn't be one I'd love right now. But I want to stick to the names of the assets that are rising in clear stage twos. Let's look for the W. Kind of. I mean, it's more of like a V, I'd say. What was defense? At this instant, education Ross, the best $5 tuition I got. Thanks, Jack. Appreciate that. Boyle, lowest natural gas futures. This was natural gas, cheapest in however many years. Okay, so this is a perfect example of like a value trap. So some of you, and listen, if you're buying natural gas to hold for 10 years, don't listen to anything I'm saying right here. But if you're trying to find something that's going to go up in 2-3 weeks or months, is natural gas the thing you want to buy here? Does that look like stage two? I mean, natural gas was volatile. It's down 42% in 42 days. Like that's not good. All right. Now over here, it looked a little better. It kind of got choppy, but see here how you had that big run up, shallowing, nice little tightening pattern here. See that? And you buy in here. That was fun. That got a nice little pop. But that's not what it looks like today. In the upper right corner, you charge the ADR is another figure, LOD. What is that? Okay, so Timothy, this is it's a free indicator. If you have TradingView, you can add this. I'll show you what it is here in a second. But it stands for the average daily range. So let's take a stock like, what are the ones we bought last week? What did we buy here? Oh, whoops. I got to log back in. Hold on. And I just put like 10 grand on this thing a little while ago just so we can play some trades here together. So I'm just doing these small. But like this is LAR, Lithium Americas, one of the trades I gave out on Tuesday on the YouTube videos, right? So you see the pattern? Do you see why I bought it? Right? Same idea. There's the breakout. And look, I'm up 25%. I've only been in this thing for a week and a half. I guess almost 2 weeks. But nice little move. The one we did last week, BTU. Same idea. Monstrous run up. Comes in. Shallows out. Beautiful little shallowing pattern right up here. Well, right here as it's coming out. And it's currently on the way. We'll see what happens. But it's the same thing back here off the lows. And the reason this works so well is playing off the pure supply and demand dynamics. I don't care what it is. It could be Beanie Babies or gold bars. It doesn't matter. If there's more demand and supply, it's going to go up and vice versa. And so after something gets hammered, when it goes from 30 to 10, what needs to happen? The supply needs to be absorbed. As long as there's more supply than demand, as long as there's more sellers than buyers, it's going to keep falling. It looked cheap at 20. It looked cheap at 15. It looked cheap at 10. How do you know where to load? You don't. Until you see, finally, buyers coming in and a few less sellers and a few less sellers. That's when you want to get in. Once it's absorbed the supply. They even made you another little tiny pattern right here before the big breakout. Okay? Questions on this so far? By the way, if you haven't already, go to tradewithross.com or click the link in the description. You can join our annual service, an entire year for just $5. You'll get live weekly sessions with me every Monday. Right now, we're doing one on YouTube. We may have to pull them back to Zoom. We also do a live Thursday session every week on Zoom. You get access to our indicators, bonus reports, support from our team, tons and tons of. It's literally just $5 for the whole year. No strings. So click that link if you want to learn more and join our group. And I promise, if you don't get $5 of value out of this, I will write you a check personally and mail it to you to refund your money. Okay. Do you also use automatic trailing stop loss? I don't, just because I'm in front of them all day, but some people do. Nothing wrong with that. What about First Majestic AG? Yeah, it looks phenomenal. It looks great. I mean, it's ripping higher. It's just going to track with silver. In fact, it's up another, what, 5-6% overnight. Going to open up at $20 here in about 60 seconds. You got your LAR. Good. Vince's love it. Do the big players ever use options at point A prior to the run up they're orchestrating or any subsequent point? I mean, some will, Jack, but like that's generally more when they're using options. If you're talking about a big multi-billion-dollar fund, they're not the options you and I buy. They may get a direct contract with their prime broker, with Goldman to get some leverage, but typically not as much. If you're trying to get a 5 or 10 or $20 billion position in something, you're not levering up. You're not using options. You're not dealing with time decay and liquidity issues to get out of those things. So it's not near as common. Smaller shops, traders like us, sure, absolutely. Up 34%. Love it, Don. Good job, man. All right, markets are open, as you can see. Down just a hair, about 0.5%. In the indexes, not surprised. But again, before you panic, that's where we are. That's the S&P 500. It made a new all-time high on Friday, okay? We are nowhere near anything resembling a bear market, so we're still foot on the gas. Can I comment on NU? New holdings. I don't know much about this. A regional bank, $83 billion. Company's founded, headquartered in the Cayman Islands. That's a big scare point for me. I mean, it looks fine. It's clearly in an uptrend. It's a volatile little sucker. But I don't see anything that would worry me. It just, doesn't move as smooth as some of the others, right? And some stocks are more tradable. Like some you'll kind of see do this and really smoothly head up. This one, as you see, is a little choppier. So, just have the stomach for it. We're with SpaceX on data centers, RDW. Okay, let's take a look. Yeah, it's trying. This is a small little guy at 1.75 billion, so still a small cap stock. It does look like it's coming off the lows, right? I mean, it's not perfect, but we're seeing what I said you want to see at the low, which is this kind of shallowing formation here at a lot of supply kind of in this level. So not a perfect chart, but yeah, it does look good. And you can see huge increase in demand. Big uptick in volume. Look what we've seen the last month, right? So some big buyers coming in. If you're into this thing, I'd be targeting kind of $17 to $18 for the first part of that run there. But, look at it. It moves hard in both directions. So just be comfortable with that. Chevron's a bit extended. This was, I don't know. It's really not that bad. I really want to see it absorb some of this supply, right? So don't get in the habit of just chasing stuff that went up last week. I mean, you want to get some kind of an edge. And so, I don't know. It's fine. It's just, it's choppy. It's all over the place. I'm not really seeing a lot. You're buying puts on SLV. Brave man, Don. Are you protecting yourself or betting on it going lower? That's a pretty strong uptrend there in the chart. Oh, well, Black Edge, yes. I mean, Black Edge, we're chasing like big options. So there may be something that we don't know. What I'm showing you is how to find the stocks and the opportunities where big institutions are buying. There's big demand. There's buying support. You're in a good market. The wind's at your back, right? When you have the best chance. And it's no different with silver, right? There's good points to buy, and there's extended riskier points to buy. This one, you only got two shallows, but you see the same idea. I'll put it in log scale to level that up a little. See it here after the big run? It needs to digest and absorb that. And then here's a decent little buy point. I was hoping we'd see something like this in silver after the huge move. So far, we haven't. Demand is huge. It just ripped without us. But even here, coming off this one is a big multi-month period here, but it did kind of shallow up and eventually broke to go higher. All right, before we start looking at individual stocks, let me show you how to know where to focus, because obviously it's easy for me now in January 2026 to say you should be in silver, you should be in gold, you should be in the miners. But how do you know at that time? Well, the easiest way to do this is to focus on the leading areas of the market. And again, tradewithross.com, if you want to sign up for a year, I'll teach you this stuff week in and week out. I promise you'll see a huge difference in your results if you give me a year with you. But what this is kind of a table we had coded up for TradingView. And we give this to all of our Black Ops members. If you go to that link and sign up, we give you access to this for free. And what it does is look at 40 subsector ETFs. So one is metal mining stocks, one is semiconductors, one is solar energy and lumber stock, all the different areas. And says, all right, which ones are up the most over the last 1 month and 2 months and 3 months and 6 and 9 and 12-month periods? And here's why that's important. Big shops, big institutions, they're not getting in really tight and stop loss like we are. They can't. Listen, when Warren Buffett built his position in Apple, the most liquid stock on planet Earth, it still took he and his traders 2.5 months to build up that position. Buffett owned at the peak around 200 million shares of Apple, okay? And look down here at the bottom. Look how many shares it trades each day. 40 million, 45, 40 million, 37 million. A big day's 90 million. He was buying to buy 200 million shares. There weren't 200 million shares for sale. So he had to methodically buy this stock every day, every week for 2.5 months. When Goldman Sachs believed the big opportunity we're putting our institutional clients is nuclear energy. We believe it's the solution to the AI power grind. We think it's clean, it's renewable, there's new tech. We believe nuclear is the play. They're buying NuScale Power. They're buying GE Vernova. They're buying OKLO. They're buying United Energy. They're buying chemical. They're buying all the nuclear stocks. People that make reactors, the ones that mine uranium, the ones that make the mounts and the software to make it all run. And so when they're doing that, again, it takes them weeks or months to do so. So if all the big players are buying nuclear, or if they're buying mining stocks, or they're buying steel companies, or they're buying whatever it is, those areas of the market are going to rise faster than the others, right? Just makes sense. Demand, supply, moving prices, all the stuff we've covered the last 30 minutes. So if we can find areas that are consistently outperforming, that are leading over the last 1 month and 2 months and 3 and 6 month periods, that's where we want to focus. Every bull market has a theme to it. In the 90s, it was the dot-com boom, and everything that mentioned dot-com was surging. It was Intel and Cisco and AOL and all those. From 2010 to 2020, it was the big tech theme. We forget that before 2010, we weren't using Facebook. Nobody had Netflix. Google's barely being used, but they came to fruition. It was the Amazon, all those. That was the big theme, and those stocks went 800, 1,000+% apiece. After COVID, for those 2 years, it was the work from home theme. Our lives changed in a big way. We were buying Zoom and Teladoc and Peloton and all the companies that benefited from everyone working from home. For the last couple of years, it's been AI. That's why NVIDIA is up big. That's why Supermicro and everyone involved in the AI space has done well. The last 12 months, metals have really come into play. So all you want to do is, again, sign up at tradewithross.com. You'll download this indicator to TradingView. You have it for life. And look for areas that are shining. What are you seeing? What names are you seeing over and over and over again on this? Now, Rob says indicators that look like mine. So you can set up this how you want. So go to the settings. If you just want to look at 1 and 2 months, fine, do that. I've got 2 of these. One is showing months 1, 2, and 3. Another is showing months 6, 9, and 12. You can look at the best 7, the best 5, the worst ones. It's up to you. I've got one up here, as you see in the top right. showing 1, 2, and 3 months. I then added another version here, bottom right, showing 6, 9, and 12. But what are you seeing? Give me some names. Type it in there. What areas are you seeing outperform? Yeah, mining and metals, absolutely an obvious one. Number 1 in 1 month, number 1 in 2 months. Near the chart. And this is just the top 7 out of 40. So anything on these lists is in the top 20 to 25%. Pretty clear where the focus is, right? So we've been buying mining stocks and metal stocks and gold and silver. What else are you seeing? Well, lately you've seen lithium coming up the ranks. Really strong on a lot of different time periods. So what stock did I recommend last week? I'm sorry, a week and a half ago. Lithium Argentina, LAR. It's up 32%. Folks, I've owned this thing, and I told everybody to do it, by the way. Go to my YouTube channel. I gave this trade publicly. It's been 11 days. We're up 32%. And if you can make 32% on a stock in let's just say we close it here. Good. I'm happy. Take the profit. I'm out. Cool. Relax the rest of the month. Do it again next month and the next month and the next month. And if you can do even 4 or 5 of these a year, the compounding effect of making 30+% in a couple of weeks is monstrous. You don't have to have this rare, genius level insight that picks the stock that no one else saw that you did that goes up 200 or 300% this year. I've done that like once my whole life, maybe twice. But the big returns come from compounding your wins, for making these 15 and 20 and 30 and 40% gains and then rolling it over and doing it again and doing it again, right? Now, I already sold half of this. We bought here. It made the big move up. I was up 20%. We were up 20% in like 5 days. I sold half. I raised my stop loss. Now, initially when I bought it, my stop loss was here, right? So I was risking around 9%. Now I'm up 33. My stop loss is now here. It just gapped up big. I'm going to move the stop again. I'm going to take this stop, bring it up to this little swing low here. We'll call it 670. Move it up. Now, what's my worst case scenario now? Worst case is this stock falls off a cliff. I'm out there, and I only make 15% on the second half. Right? And if you haven't sold any, this would be a good point, in my opinion, to sell half the thing. So the process is really straightforward. Whoops. Yeah. Mike's in the way. Here's the S&P 500. Bull market or bear market? Bull, obviously, right? Ripping to the top side. Cool. Okay. Bull market means markets are going up. I need to buy stuff. What do I need to buy? There's 70 different groups in the market. There's 5,000 stocks. Which ones do I want? Well, what the hell's going up the most? I look at mining stocks. I'm going to look at lithium stocks. Nuclear's trying to come back. Okay, cool. So let's say mining and metals is what I'm doing, right? You're going, all right, Ross, that sounds great, but how do I know what the mining and metal stocks are? Well, you're going to use a very sophisticated tool called Google, right? Okay? And you're going to type in the group, and you're going to put ETF afterwards. ETF's an exchange-traded fund. There's exchange-traded funds for all of these, and every one of those funds has a professional money manager who is picking the stocks to represent that group. So we're just going to steal their homework. All right, so mining and metals. Let's just take here the State Street Mining and Metals ETF. Let's look at the website. Now, they all report their holdings publicly. They have to. So again, we're going to steal their homework. And all we're looking for is this word holdings. So we're going to click on that. And this gives me their top 10 stocks by weight, which one they have the most money in. Alcoa, Hecla, Coyer, Freeport, Warrior. Okay, so here's what I do then. I go over here and I make myself a watch list. I've already made one called Mining and Metals where all these are in here. But if I hadn't, I'd just go, all right, let's add these in. Alcoa, Hecla, Collier, Freeport. So you just start typing. Whoops. Alcoa, add it. Hecla Mining, add it, right? And then let's look at what those have done. This is Alcoa. Yeah, that'd be a pretty good one. Where's Hecla? Don't we own Hecla Mining? Didn't we buy that in Alpha Stock Service? Let me see. Bought it in something. Yeah. So here's our portfolio. Now we run a premium service here. Costs more than $5, but it's worth it, as you can see. This is our current portfolio. But look at the stocks we bought here just in the last month. Look at these. Whoops. Now, what do these names have in common? Hudbay Minerals, Collier Mining, Hecla Mining, Endeavor Silver. They're mining stocks. Pan American, EM Gold, Seabridge. And look, we bought this one a month ago up 20%, 21%, 25, 26. It just updated the prices. We've been in these stocks. We bought Hecla Mining on January the 2nd. Today is January the 12th. We're up 26% in 10 days on the stock, not the option. We got an option too. What's that thing worth? The $20 call expires in March. Oh, that's going to be what, $4 or $5? We've doubled our money on those. But again, it's this game is not that hard if you know what you're looking for, right? You're in a bull market. You want stocks to go up. Good. I mean, you want stocks. Okay. Where do I want to focus? And mining and metals has been at the top of these lists for like 6 months. This is not new. I'm not, Monday morning quarterbacking. This is not hindsight trading. It's been clear as day. When the stock market, let's go back and look at the S&P. Now, if you guys were trading last year, you remember this big, massive sell-off when Trump decided to declare a trade war against the entire earth, right? And in April, we came off the lows. We started to rise. Guess what was at the top of these lists? Nuclear, all of them. Nuclear and uranium. Now, again, look at the time. This is May 1st, okay? Right in here. So guess what stocks we bought? This is SMR. It's New Scale Power. They make small modular reactors. It's a nuclear stock. It was up big, then it got whacked, and do you see the pattern here off the bottom that I've been trying to beat into your brains for the last 45 minutes? Do you see the shallowing? We bought it right there. Our stop loss, we were risking 10%. We were up 97% in 17 days. Not on a penny stock. On a $5.8 billion firm, we bought OKLO around the same time, another nuclear stock. You see why? Comes in, nice, shallowing, tightening action, bought right there, and it went from 30 to 90, 85, excuse me. Questions about this? And everyone comes in, give me some stocks to buy. Okay, I'm going to try, but that's only going to help you this week. It's not going to help you all year. Learn to do this. I'm telling you, it is the way. And look, OKLO did it again. Was it perfect to the penny? No, but you see the same idea. The big run up comes in, shallows out, absorbs supply, breaks out right there. And I've put this in logarithmic scale. Let me take it out. And then it goes from 82 to 182 in a month, right? A scan to find these shallowing patterns. No, at least, you'd have to really code some stuff up. I don't know how to do that. I'm not a tech guy, but that's why we use this. Look, there's been studies done. William O'Neill, the founder of Investors Business Daily, has done work. He found that 50% of a stock's move is determined by the group that stock is in. What that means is the NVIDIAs, the Majestic Silver, all these, these stocks that go up 50, 100, 200+%, half of that gain came from of what group they were in. In other words, mining and metal stocks are surging. I mean, First Majestic Silver's up huge. Just in the last 6 months, the stock is up 157%. But 80% of that move just came from the fact that it's a silver miner. Mining stocks are hot. All the money's going there. So even if you pick a terrible one, you're going to do well. You pick a good one, you're probably going to do very well. And so take the other side of that coin. Say you do build one of these scans and you've got the perfect shallowing pattern. You got this stock that's come up. It's just beautiful. It's poetry. It's nice textbook shallowing right in here. It looks just beautiful. You're buying a breakout here, but it happens to be a real estate stock. Or it happens to be, I don't know what's cold right now. A lumber firm or building materials company. Well, if building materials area is not rising, if there's not a bunch of demand driving up this sector, your odds of success are way down. You'd be better off just throwing the dart at a mining stock or a nuclear stock or a lithium company or something that is trending higher. So when you combine it all, when you have a bull market, listen, there's going to be another bear. There's going to be another chop. There's going to be times where it's really, really hard to make money again. So when it's easy like it is today, take advantage. Then you go to the top areas of the market. Don't overcomplicate it. Just pick the top 3, 4, 5 groups you see popping up here, and then do that process. Google the ETF, find the top 10 stocks, and look, we did this almost a year ago. I want to show you this list because I haven't touched it since then. Okay? This was, where was it? Here it is. We built this in this live session in April of 2025. And we said, what are leading areas? And here's what they were: crypto and digital payments, nuclear, quantum computing, mining and metals, and of course, artificial intelligence, which is kind of a catch-all. And I just did that probably, put the top 8, 10, 12 stocks in each group in this list. And let's look at what they've done since that time, since April. Coinbase broke out from here, went from 200 to 400. Robinhood went from 50 to 150. MicroStrategy has been a giant turd. Can't win them all, but I wouldn't blindly buy this one. Coors was at 8. It went to 22. Galaxy, right? Look at the breakouts in here. Cypher. Look at that big pattern breakout from 7 to 27. CleanSpark. So all the crypto stuff did well. From April, not saying you held it forever. We're not marrying these stocks. We're just dating them. Nuclear. We covered OKLO. This one got bought out. It was up big. UEC's up huge. SMR made a monstrous move. CEG, Denison Mines, all of them. What about the quantum group? We bought QBTS here at $8. It went to 45. We bought QUBT at 8. It went to 20 in a month. IonQ, ARC, Rigetti. Look at these moves. Oracle, Lam Research, Coherent, Taiwan. I made this list last April. MP was at 26. It went to 100. CRS has almost doubled. Coyer has tripled. EM Gold, AG, the silver stock we were looking at. All these have done very, very well. The AI stuff's getting a little long in the tooth, but they all still done very well from April. And so if you just do that, if you just will look at the areas performing the leading the market, build you a stock of 5, 8, 10, 12 in each of those, and ignore everything else for the next 3 months. Just look at that list of 30 or 40 or 50 stocks you've made and stick to this one bread and butter setup. Wait until it consolidates and tightens and breaks out. Wait till you can risk 5, 7, 8% to see all those big moves I just showed you. I'm telling you, you'll never go back. And if you want help, just click. It's $5. If you can't risk $5, you don't need to be trading stocks anyway. TradeWithRoss.com. Get signed up. I'll do this every single week with you for a year. I'll give you this indicator for life. I'll give you bonus reports. We'll give you access to our team. It will be the best $5 you ever spent. All right. Y'all want to look at some stocks? Let's see what we got here. Two from last week doing pretty well. BTU's kind of gapping a little. It's still doing fine. We're just going to give it a little bit of time. Yeah, that's right. You do have to have an and once you subscribe, you'll go to this little page. It looks like this. If any of you guys sign up today, I'll go ahead and give you this link. Hold on. It's called the Industry Strength Indicator. And you're just going to go to this page. You're going to sign in with your email address. You're going to put in your TradingView username. Your TradingView username, just go up to TradingView, hit your little name. Mine's Ross Givens. I'm real creative like that. Put it in. We'll give you access. And then all you're going to do is come here to indicators. It's called the TA, which is Traders Agency Industry Strength. TA, Industry Strength. Whoops, misspelled it. Notice it's got a little lock there on it. We'll authorize you. Then you just click it, add it to your chart, and come in and make the settings whatever you want them to be. I'm going to look at 2 and 3. I'm going to do top right. I'm going to make this larger. Hit OK. And then there you go. Okay. All right. Fire away. I'm getting hot in here. I'm going to take this sweater off. It's 35 degrees outside, but it feels like 80 in my house. Is it too late to jump on LAR? Yes. I mean, I'm not saying it's not going to go up any higher, but you don't have anywhere near the same risk-reward advantage we had. BTU is probably still viable in here. And look at the market. Look, we're barely down now. That's the sign of a bull market. Bull markets tend to make the down moves overnight and then gap up and then go up during the day. Bear markets tend to gap up at night and then go down during the day. Not always, but the sign of a healthy market. We get this nasty news, market gaps down. Where are we? 25 minutes in, and we're already right back to the highs. REMX, the ETF. Yeah, it's a bit extended. I mean, you can see, look how clean that pattern was there. Now, it may keep going. I'm not trying to tell you to not buy it, but I'm just a total chicken, right? You think you don't like losses? I do not like losses. I don't know if it comes from growing up without any money and finally having some or what, but I don't like it. So I keep risk very tight. And so if I'm buying in here and I can, risk 3-4% and get a move like that, I'll do it. The question you need to ask yourself with REMX, and it may still continue higher, it looks like it will, where are you wrong, right? That's question number one. You're buying whatever it is. How low does it need to go for you to say, nope, I was wrong, something's changed, I'm getting out? And you need to know that before you buy it, because you're not going to get any smarter once you own the trade. So if you want to put a stop loss here, then you need to be willing to risk 17%, which is a big chunk on an ETF, in my opinion. But if you're comfortable with that, go for it. Marvell, MRVL. No. I mean, it was trying. But remember what we're looking for. I want to see price action tightening. I want to see it coiling up like a snake, getting ready to go higher. What are we getting here? It seems to be widening. Higher highs. It's trying to go. Nope, can't. Now rolling over. I mean, it just doesn't know where it wants to go right now. So it wouldn't be my favorite. Courier mining, yeah. I mean, we own this. It looks great. Nice little gap through today and pushing higher up 7%. Looks phenomenal. Little concerned about the supply in here. Right, so all the FOMO buyers you bought back in October have been sitting down 40, 50%. And when you get supply like that, you're running back into a significant high. It is not uncommon for it to come up here and then kind of pull back a little and stall and wait, assuming it's going to go higher, then go. Just because of these people they want to get out. They want to get their money out. So they're going to create some supply. But yeah, it looks really good. But look at the difference here between makes a big move. You get about 6 weeks of nice, clean consolidation, and then it runs, right? So it went a little far. I think we bought this coming in here on a pullback. But anyway. But yeah, looks good. Looks like it's going higher. Would I buy it here? Probably not. Heckler, probably same story. I mean, it looks phenomenal, right? If you just want to get in there, get a hold of this thing. If you're willing to risk 25 or so percent, go for it. If I bought here, I'd buy smaller than average. I just, I say extended. All I mean by that is It's up 50% the last month. Okay. And the whole pattern we're looking to exploit is a big move. And then, okay, there's going to be people that want to sell. And we need to get the sellers out of the way, get the weak hands off the stock. And then now it is free to run higher again. So when you're up big here, I'm not saying it's going to happen tomorrow, but you're at a much higher risk of then coming in and absorbing that, right? So that's why I'd say if I really wanted Hecla, I'd take a half, a third, a quarter size, what I'd normally buy. And then if it keeps going, great, I bought some. If it pulls back, fine, I'll add in there. I see Danny bought LA Arthur 2 weeks ago, sold half at 25% gain. Now I'm up 32%. Love it, Danny. You feel good? TradingView, what version? Just the newest one, whatever it is. Do you execute trades from TradingView? So TradingView is not a broker. They're just a charting platform. What you see here, I've got interactive brokers linked to it. What you can do, there's a number of brokers that will allow you to log in via TradingView and place your trades here on the chart like I'm doing. So most of these are, mom and pop futures traders, or there's some crypto probably based in the Bahamas that I wouldn't touch. Webull, I think, is not good. Dorman, Cobra, Iron Beam, Ninja, those are all futures. Forex, Awanda. But yeah, you can do Webull, Mumu, IB, or TradeStation. Any of those you can just log into. I already put my, whoops, let me put my credentials in. Let me see if it's going to do it. Sorry, I mean to slow the session down. What's happening here? When you're streaming to a whole bunch of people, it sometimes slows down the data. But anyway, it'll pull up just a username and password. You log in there, and you can trade right off the charts. Now I've screwed up and logged out, but see if I can do this one. I don't want a million phone calls. I'm gonna take this off screen here, but I'll show you. Okay. So there you go. And then you can just trade right here off the charts. So if you want to buy a Hecla, just come in, buy. I want to buy, whatever it is, 10 shares, 100 shares, whatever, at the market or on a limit or on a stop. You can place it and it'll show up right there. Yep. Okay. Let's see. What else we got? T1 Energy. Yeah, it looks good. Energy products, small cap. Based out of Austin, developing battery solutions. Okay, so it's a battery company. Yeah, it looks really strong. I mean, I don't see a perfect buy point in there, but it looks great. SPRY. I mean, maybe, pharmaceuticals are beginning to show a little bit of strength here over the 1 month. It's not a consistently leading area. It does, have some characteristics of a stock tightening up here, trying to go. It looks like it gapped up big on Friday on some piece of news. What scares me is, it ran 20% a day, and today it's just quickly giving it all back. So I'll say this. If this stock is going to run, this is a perfect place to buy it. Right here on the retest. Your stop loss needs to be here. So it's volatile. It's a small cap. It's a big mover. So you're going to need to take a little bit more risk. But that's actually not real. That's 11%. So if you bought SPRY here, it needs to hold above 1080, in my opinion. So if you want to buy it here, right here, you get a second chance at the breakout zone, or you're buying it at the danger zone. But yeah, I wouldn't let it go below 1080. PHAR, for your son, Ed, I apologize. What is this? Farming Group sponsored ATR. Okay, so this is an ADR, is an American Depository Receipt. All that means is it's not a U.S. company. It's not based on the New York Stock Exchange, the NASDAQ. It trades on some other exchange, Netherlands. Oh, my goodness. I don't know what exchange it's on. But an ADR is essentially an IOU. It says, okay, you can trade this on the New York Stock Exchange. It's not actually Farming Group stock. It's an IOU for a share of stock on this exchange in Europe or Germany or wherever. So what do we think of this? I mean, I think it looks just about perfect. If I'm being honest, I don't want to stake my reputation on those things. I have no idea what it is. Pharmaceutical products, Firm offers Ruconest, recombinant C1 ester C inhibitor. I don't even know what that means. All right. But yeah, I mean, look at the consolidation here, right? Nice little kind of flagging, wedging action here. And again, same idea, right? Nice kind of tightening up here. Now, it's a little bit whippy. It's kind of, all these swings are, how bad is this? It's an 11% drop. Even the last one is still like 9 or 10. So it's not, super tight and conservative, but ADR is good. ADR, somebody asked this earlier and I didn't finish answering it. It stands for average daily range. So it says, all right, for the last, what do I have this set at? I've got it set at the last 14 days. No, 20 days. On average, what does this stock move from high to low in a given day? And why does that matter? Well, a higher ADR means a faster moving stock. This one moves 4% in a day. SMR that we were looking at earlier moves, no, that's not it, 7% a day. Something like a Tesla, 3.5%. Now, what about Walmart? 1.5%, right? So it just kind of helps you see, is this a mover? I'm not saying I wouldn't buy it because the ADR is low. But if I got a stock that moves 1.5% on average, would I risk 15%? No way in hell, right? If I got a stock moving 10% a day, I may have to risk 15. But if you see the ADR is 1.5%, or in this case, 4.25%, you can kind of say, all right, well, if it gets a decent run, right? If it goes for a couple of weeks and it's moving forward, this thing could move 15, 20% in a week or 2 weeks. So yeah, I think this looks really good. I don't know much about it. Again, if it's a turd, I don't know about. I've done no research on it, but just look at the stock. Really nice, clean gap up. So Friday, just look at what happened here. So we had the resistance was pretty clear here at about $18. It gaps up, meaning it opened above the new range here. It sold off and then came right back to close strong. So if you look at a 5-minute chart, you'll see that. Oh man, this thing trades thin. So looks like just a big sell order and then came back. But yeah, I mean, I think it looks good. Not the kind of stock I typically trade, but say your son Ross approves. Okay. Appreciate the comment there. Kind of, not really. USAS. American Gold and Silver. Yeah, looks good. I mean, obviously, I would have rather bought it, over here. It wasn't a perfect shout, but you see, you got a couple of months of consolidation here. Kind of coming in a nice little handle here at the end. So that's what I would have liked to buy. But yeah, look it up. Retested a breakout area. Bouncing immediately. Perfect action. Looks good. Which broker are you using? I'm trying out a couple here. I sent like 10 grand. I got most of my money at Fidelity, and I've got a different interactive brokers account, but I sent like 10 grand to a new account at IB. I sent 10 grand to a new account at Moo. I'm trying a couple out. For me, I just love TradingView. The charts are great. I don't work for TradingView. I don't get any money off this. I don't care if you guys sign up for it or not. I'm just telling you, I've tried every charting platform on the planet, and this one is leaps and bounds better than anything else. So I like to just be able to trade right here on the chart, not go, okay, here's the chart. Hold on, let me pull up my brokerage account, come over here. So if I was you, Moo's easy. Interactive Brokers is good. TradeStation apparently is pretty good. The only one on here I haven't tried. I'd probably try one of those. Mac, my man, up 32% and 165% on the option. Is that on what LAR? Good for you, man. Awesome, Mormon. Look forward to it. What about buying more LARs? It is now down from the high today after I sold 50% for a 24% profit. Okay. It's up to you. I wouldn't personally. As it's off the high, but like I'm also kind of looking at this going, what does that mean? Well, it means there's a big buyer started to get grinded, and now they're selling back off. So if the only real time, because it's down, is if you get what I call a retest, right? So this was the initial breakout, right? We bought it, or I recommended buying it, and I bought it. I don't know what you guys did, right in here, okay? So if it runs, and then this is a little high to do that, but kind of gets a retest, I will often try to buy there at the danger zone. It's kind of like a second chance to buy the breakout opportunity. Now, this one's already up 30+%. I probably wouldn't do it here. But generally, when you see this, it's going to be a stock that kind of goes, up 6, 7, 8, or 10, retests it, and then goes like that. So if I miss this, I consider buying here. Once it breaks through here, my stop loss is raised up. ENTG is on turbo now. I have it on paper trading. Okay, thumbs up, 9208. Let's see. What is this? Integris, industrial machinery manufacturing, microelectronics industry, material solutions, microcontamination, bunch of stuff I'm not smart enough to understand. Okay. Yeah, I mean, I guess if you got it down in here, you're doing pretty well. This is personally, I wouldn't buy this stock, right? Because and now that it looks bad, I just don't see where I have an edge. Like, you've seen what I want to see. I want to see it coming up and then tightening up and then shallowing, right? I want to see this. When it's just this whippy, like it's all over the place. It made a new low, then now it's making a new high, all within like it's just wild swings. Now, if you're trading this on a 5-minute chart or you're day trading or something, like sure, there's opportunities in there. I mean, you see this, how it made the big move and then came in and shallowed up, perfect breakout. Cool, yeah, for a very short-term day trade. But I mean, it's just not the kind of name I look at. Don't take this as me, Ross, saying my stock's not good. It's just, there's easier ways to do it, right? And again, tradewithross.com. There's a link there. Sign up for an entire year for $5. But if you're newer to trading, especially, what I would tell people to do, and I have told them this thousands and thousands of times, is figure out one strategy you can follow, one pattern, one technique, one thought process, and just master it. Commit 3 months, preferably 6, to doing just that, right? Because what most people do is something known as strategy drift. You have a session with me. This Ross guy seems like he's not a total moron. That kind of makes sense. I'm going to try that. And then next week, you go into some webinar, some guy trading options, and then you're doing some options. And then you come some guy claiming he made a bunch of money day trading, which he didn't, but he'll claim he did. And you go try it. And the problem is you don't know what's working. You're ping-ponging all over. You got to commit to something. Not forever, but do this. And the logic is sound. If anything I say to you doesn't make sense, don't do it. But to me, if I'm going, all right, I got a bull market, things are going up, good. I got clear leading areas. There's been leading themes to every bull market since 1800s. Why would that stop now? So let me find the leading groups. I've got leading groups in a bull market. Let me find the top 10 stocks in those groups. The ones picked by professional money managers in Wall Street. Okay. And now I've got a pattern that makes some sense. Supply and demand, leading groups, little risk, big upside. Okay. So if I can't make money in a bull market, buying stocks, the top stocks in leading groups coming out of a clean pattern, if I can't make money with that over 3 or 6 months, this doesn't work. I'll tell the whole world that Ross is a moron. Don't listen to him, and I'll go find somebody else. That's fine. But if you try this for 7 days and then you throw in some trades here and something over there and you're down, you're like, well, I don't really know what's working and what's not. Like RC said here, track the trades, journal them. Don't make 50 trades a week. Find 2, 3, 4 good ideas each week and take those. And then after you've taken 10 or 20 trades, go, all right, how many of them won? How many lost? What was my average gain? What was my average loss? And then it's just a math equation. All right, I'm winning 60% of the time. I'm averaging a 15% gain when I'm right and a 5% gain when I'm wrong, which means I can be right 1 out of 4 times and not lose money. And so I can see that this is working. Am I not going to win every trade, every week, even every month? But if over time I'm winning more than I'm losing, I'm making more when I'm right than I'm losing when I'm wrong, I'm going to compound that and you're going to do very well. And it's as simple as that. The only difference is your time frame. If you're a day trader, you're risking 1% to try to make 2 or 3. If you're a swing trader like me, you're risking 5 or 10% to try to make 30 or 40. If you're Warren Buffett or Goldman Sachs, you're risking 40 or 50% to try to make 200 or 300. The time frame's up to you. Some people love the action. You want a day trade. I hate it. I don't like it. I'm not good at it anyway, so I'm not going to stand here and pretend I am. But this, I think I'm pretty decent at. It fits my temperament. And so I've seen hundreds of you guys make a lot of money doing the same thing, following along. So I'm going to keep teaching. All right. That's my soapbox. All right. I'll go about 10 more minutes. I'll look at some more stocks. If you haven't already, click that link. Go to tradewithross.com. Get signed up. It's $5, folks. If you don't like it, call me. I'll put a $5 bill in the mail and send it back to you. I'm super confident you're going to get $5 of value out of this. A year of live trading, mentoring sessions with me, another year of mentoring sessions with my top analyst, access to my indicators. I also put out a weekly newsletter. It goes out every single Friday. The one that went out this last Friday was on what I believe is a big opportunity in the energy space, the big oil trade, to take advantage of this situation going on in Venezuela. And so this was, the weekly newsletter I put out. It goes every Friday at 6:30 Central. And it laid out what I think is a big opportunity, big catalyst in the energy space, what's happening. And I gave 3 specific option trades I'm taking on that. Even did a video on this and shot it out. Sometimes I just talk about leading areas of the market. I'll give some, a couple stocks I like, or try to help you identify tops and bottoms. It's whatever I see. I'm just trying to give you stuff that'll help you make money. All right. So click that link, get signed up, or don't. I don't care. I'm not getting rich off the $5. Trying to help out. All right. LYSDY. I already know this is going to be a little penny stock. Let's see. Yeah. Lithium rare earths. Not a chance in hell. I mean, it's actually not. It's $9 billion. Wow. Why does it trade OTC with a 5-letter ticker? Oh, it's Australian. Okay. Yeah, I mean, it's just too whippy for me. Now, pop quiz time. Everybody look at this chart of Lennis Rare Earth Limited and tell me where the best buy point was. You can either give me a price or give me a date, just roughly. Early July, late November, whatever. Where was the best buy point? And don't say right here. Obviously, that's where you'd like to buy. But where could you have bought based on what I'm showing you here? And then I'm going to start wrapping this up. Who can tell me? I'm watching the comments. There's about a 5-minute lag, so I'll give you guys a second to answer here. Yeah, Halliburton was an option trade. That's true. Oh, somebody mentioned Halliburton. Yeah, thanks. Breakout 1009 mid-September, says Trent. Anybody else? Trent, you're getting the gold star, my friend. Bingo. Right there. Mid-September, late September. Yes. Yes. Good. We're learning. Look at this. Look at how clean that was. Let's zoom in here. Let me take this off. Look at that. The stock was up big, right? From 5 to 10. And then look at how beautifully it comes in and shallows right there against the high. Resistance was clear as day. Ask Helen Keller where the selling is stopping. She'd say $10, $10, $10, $10. So when it gets through $10 here, you buy. Where's your stop loss? Right here. But a 9% risk. And look at the beautiful move you got. Instantly up 60% in 25 days. And if you're sitting there going, yeah, Ross, but it came back down, you're missing the whole point. I don't care if it goes back down. Most of these are going to go back down. I'm not marrying the damn things. I'm just dating them. I'm just getting in. And look, you're up 15% in a week. You're up 30% in a week and a half or 2 weeks. You're up 50%. Sell some here. Sell some here. When it runs down here, get out of the rest. You're not going to sell here at the tippy top, but you're going to make a nice 30 or 25 or 40% gain on this. Yes, good. Okay. You're all learning. Can't buy membership off your link. Puppy Dog Lover TU3BZ, interesting name. Just try tradewithross.com. All right, look at 3 more stocks. Let me see what we got here. What do you set up in the indicator? Yeah, that just shows the ADR, the average daily range. LOD just stands for the low day distribution. You don't need that. But if you want to add this indicator, just put in, what is it? Here it is. ADR % / ATR LOD by this guy, Armor Schiluk. Whatever. Yep. All right, last couple of stocks, and then we got to run here. Let's see what we got. KTOS, never heard of it. Kratos Defense and Security, Aerospace, 18 billion. Wow, what a monster. Yeah, I mean, it seems a bit extended to me. Kudos to you if you got it here at 83. We're seeing aerospace and defense begin to rise really just in the last week because of the situation in Venezuela. Everybody's ramping up their spending and, again, market price all this stuff in. It looks great. If I owned it, I'd hold. I wouldn't buy it here. It just seems a little bit extended in my opinion. RPD. No. Like big, giant, massive no from like if there's insider buying or something, okay. And I think we did see this was some insider buying, but like I'm looking for stocks institutions are buying. And that's just not the case here. What you're probably going to see, and again, if there's something we don't know and there's big news, it could gap way up here. It's absolutely possible. But like, I really want to see something like this showing me it's absorbed a supply to begin the run off the lows. Look at AMD. That's a big name. No. Now, this is a perfect exercise. Do this, okay? Right-click in the price side of the chart and click that invert scale. It's going to flip it upside down. All right? Now, what do we see here? Well, this looks like a great buy. It's been selling off. It finally absorbed supply. It's beginning to tighten up. Had a little dip. It came right back. Really nice. Looks like it wants to break out and go higher, right? The problem is this chart is upside down. So where do I think AMD is going? Yeah, right? And, just think about what you're seeing here. Think about what's happening. It made a big run. They sold to some profits. Okay, remember, if it is in demand, if the big guys are actively buying, they're going to take advantage of it and push it back up. They didn't push it back up. It's sitting here. It can't get up. And I'll leave you with this. When stocks pull back, you want to buy tennis balls and sell eggs, okay? A tennis ball does this. It bounces. An egg just splats. Why is it important? Well, again, supply and demand. You need to buy assets, whether we're talking about real estate or precious metals or stocks or rare coins, whatever it is, buy the stuff that's in demand that everybody else wants. That's what makes prices go up. And if something is at 260 and it falls to 200, it's on sale. If $1 million house in your neighborhood gets marked down to 700, it's probably going to sell in a week. Right? If clothes you're looking at go on 50% off sale, you got a much higher chance of buying, right? But look what happened here. This stock's 20% off and nobody wants it. It can't entice a buyer. That's a splat. Something could change, but right now in November, December, and January, nobody wants this stock. This is an egg. Any asset, whether we're talking about stocks or stocks that go on sale, if they are a good deal, people will buy them. So you want to see bouncing, okay? All right, I've gone way over time. I apologize. I know we could stand here for 3 hours to look at stocks, but I'm going to go ahead and end the live session here. Click the link in the description or go to tradewithross.com. Get signed up. It's $5 for the entire year. You'll get live weekly mentoring sessions with me. Now I'm doing them on YouTube, but we may go back to Zoom. We had to do that a while ago. YouTube is finicky on their strikes. You'll get access to this indicator. You'll get my weekly newsletter, bonus reports, tons of other stuff. If I can't give you $5 worth of value, I'll refund you myself. And I'm not going to say your comment, but that's a funny one. Appreciate you guys being here. If you're watching this as a recording, if you have a question, comment, feel free to put it below, and I'll do my best to respond to it. But you guys have a great rest of your week, and I'll see all you members in next Monday's session. Thanks, everybody.